Good morning, everyone.
Good morning.
Yeah, we're about to start now.
Good morning.
Yeah. All right, so good morning, everyone. It's my pleasure to welcome all of us to this panel discussion this morning. My name is Chinedu Ezomike. I'm a partner with Andersen, Head of Commercial Practice. Today, our topic is Sustainability Reporting Standards, the impact on business models for the year 2024 and beyond. As we are aware, in recent years, the global landscape of business has undergone a transformation. Sustainability has emerged as a critical issue. Organizations are not only expected to now deliver financial returns, they are expected to deliver them in a sustainable manner and to actively contribute to society and environmental well-being. Central to this issue is the Sustainability Reporting Standards. These essential frameworks for businesses to transparently communicate their environmental, social, and governance performance. These standards facilitate accountability and stakeholder engagement, and also drive strategic decision-making and value creation. So they are definitely very important. So as we gather this morning, it's important that we dissect the issues properly so that we understand clearly what the reporting standards are and our obligations in our companies. It's imperative that we explore the evolving landscape of the sustainability reporting standards and their profound implications for business models in the years to come. So today we have seasoned experts to discuss this topic and to tell us what we should be doing in our various organizations to comply with the applicable reporting standards. My colleague, Temi Tope, will anchor the session. Temi Tope is our team lead on ESG and sustainability in Andersen. With him on the panel are Dr. Rabi Olowo, who is the Executive Secretary, Financial Reporting Council of Nigeria. We have Opeyemi Ogunkoye, Team Lead Sustainability for Stanbic IBTC. We have Ovie Itie, Head of Financial Shared Services in Lafarge Africa PLC, and our own Kayode Olaide, who is the Team Lead Accounting and Advisory Services for Andersen, Nigeria. As part of the program, Kayode will give a short presentation on sustainability, and then we'll go into the panel discussion. But I'll hand over to my colleague, Temi Tope. Thanks, everyone, again, and thanks for being here. Good morning.
Thank you so much, Chinedu, for that very great introduction. We are definitely in for a very great ride, talking about sustainability today. And like Chinedu has said, we'll be having a conversation starter, which is more or less a presentation from Kayode right now, and then we'll go into the panel session. We want to encourage everyone to come in with their comments and questions as we proceed, so that we make it a very interactive session. So, Kayode. Okay, Coyote.
Yes, sincere apologies, everyone. Good morning, everyone. Please confirm you can all hear me.
Yeah, loud and clear.
Thank you. Thank you very much. So I think I should hop in right away, isn't it?
Yeah, please go ahead with your presentation.
Yes, thank you very much. Good morning, everyone. Again, sincere apologies. Some technical glitch with the system. It's good to have you all here with us. Let's just get right ahead with it. Kayode here. And I lead the accounting advisory services at Andersen. Please confirm that you can all see my screen.
Yes, please. Just have to put it in presentation mode. It's fine now. Yeah.
All right. Okay. Thank you. As introduced to us by Chinedum, we are here this morning to discuss sustainability reporting standards and the impact on business models for year 2024 and beyond. To delve right into it, the first line question would be what sustainability entails. And it is a multidimensional construct that entails engaging in practices that ensures the safety and longevity of nature and its habitats. We loosely refer to the act of sustainability as the act of working for posterity's sake, and emphasis on ensuring the safety and longevity of nature and its habitats. That's primarily what sustainability entails. Now, also considering the why and the big picture for sustainability, we would typically want to know why the term sustainability is such a global discourse that a lot of attention is being paid to at the moment. Chief of the reasons are due to climate change, activities around the change in nature, change in weather conditions, food scarcity across the globe, and also incidences of global warming and sporadic change in weather conditions. Also the issue of human rights and dignity, responsible business practices, and most importantly, posterity, which is the future, working for not only the now or depleting the resource for the future, but rather also considering posterity. Those are the essential reasons why sustainability is really a thing globally at the moment. The term sustainability hovers around the construct of ESG, which is an acronym that cuts across three different pillars, which I want us to delve into right ahead. ESG stands for environmental, social, and governance. And the three pillars are pillars of environmental incidences across climate change, waste disposal, waste management policies, natural resources, social constructs around human labor, human capital, product liabilities, social opportunities, governance around corporate behavior, tax transparency, corporate governance. That's what ESG essentially entails. So the term sustainability is hovering or hovers around these three constructs called E, S, and G, which you call ESG, right? Moving right ahead, we also now see the need for the sustainability standard. But please, audience, let me just at first delve into the advent of sustainability itself, that is the sustainability standards, before I go back to the bit of the need for the sustainability standards. So the Conference of Parties is a committee and gathering of stakeholders, government regulators and authorities, corporate individuals across the globe. And in 2021, the Conference of Parties 26 in Glasgow, there was the need to have reporting for corporations around sustainable business practices. And the body that regulates financial reporting globally is the IFRS Foundation. And they are the ones that churn out the International Financial Reporting Standards via the International Accounting Standard Board. Now, for us to have financial reporting for ESG, they had to establish the International Sustainability Standard Board, which currently functions as a sister board, National Accounting Standard Board. So the role of the ISSB is to function as though the IASB, but for sustainability purpose under the IFRS Foundation. This was established in 2021 at Glasgow at the Conference of Party 26. And then in 2022, there was the discussion around the global economy having an IFRS for sustainability reporting. Recall that the need for sustainability is a problem statement on its own, but the need for companies to have a global baseline for reporting their sustainable business practice is another problem statement to address the initial issue. Now, the International Sustainability Standard Board churned out the IFRS S1, which is the general requirement for disclosures of sustainability-related financial information, and IFRS S2, climate-related disclosures, which were in sort of like exposure drafts at the time. Then in July 2022, they became a full-fledged standard for reporting purpose. Then, of course, June 2023, there was like an official issuance of IFRS S1 and S2, which are the maiden financial reporting standards for sustainability purpose. Now, Nigeria, it is worthy of note that Nigeria, I suppose that most of our audience are from the country, are from Nigeria. Nigeria is an early adopter, and as a matter of fact, was the first to declare as being the first adopter for IFRS S1 and S2. Now, this takes me back to this. The function of the ISSB, as we see in this slide, that the International Sustainability Standard Board, was to harmonize existing ESG or sustainability standards. So when we say ESG, we sometimes concurrently call it sustainability, because sustainability across your environmental, social, and governance practice. So we used to have existing standards before the establishment of the ISSB, as seen in this particular slide, of course, which was an ideation of the IFRS Foundation, right? And typical of them were, or chief of them were, the Sustainability Accounting Standard Board, which was more concerned around issuing industry-specific metrics. Say, for instance, you are in the energy, oil, and gas space, you have your industry-specific metrics for reporting sustainability. If you are in the hospitality space, you have your metrics due to the nature of your industry. If you are in the fast-moving consumer goods space, you have your metrics. This was the responsibility of the SCSB. They gave industry-specific metrics for companies peculiar to the specific industries in which they operated within. Then we had the Global Reporting Initiative, which was like a multi-stakeholder framework, sustainability purpose. We also had the Task Force for Climate-related Financial Disclosure, which essentially gave out reporting for climate-related activities. How does your business directly affect the climate? That was the job of the TCFD. So to avoid duplicity, the ISSB that we saw in this slide has come to now harmonize these existing frameworks and any other ones. We still have the likes of integrated reporting and the likes, integrate, harmonize them into a unified reporting framework that companies globally or corporations globally under their jurisdiction can adopt for reporting purpose. Now, it is now worthy of note to speak on this, the need for the sustainability standard, right? The first of it is to give a global baseline, which we've established that fact at the time that for the purpose of having a global baseline or unified framework for reporting purpose, the ISSB had to harmonize the existing frameworks we had. So a corporation in Europe, for instance, is saying a particular thing around sustainability reporting. You can easily also pick a report from Africa and see similar language, just like we have the IFRS. So just to have that common language, and then we have a sort of a global baseline, harmonized baseline for reporting purpose is the paramount reason for the establishment of the International Sustainability Standard Board and the issuance of IFRS S1 and S2. Also, investors are beginning to pay more attention to sustainability and not just your bottom line. Investors are now being concerned about what you use their monies to do, and if it is something that is dignified, for nature, like we indicated earlier, that sustainability has to do with considering nature and its habitat. So investors are paying more attention to sustainability, and that's why we need this standard to regulate what you're saying. And again, we don't want you to greenwash. Greenwash is you stating what you have not done in terms of environmental practice, environmental and social impact, right? So to avoid greenwashing, there's a need to have this standard in which you are speaking the same language and there's a reporting template to follow, right? Also, to ensure that companies have a comprehensive sustainability information. Please apologies for the typographical instance here, error here, right? So companies having a comprehensive sustainability information for reporting purpose, which is like sort of what I had indicated earlier on about having a unified or uniform sustainability information, and also for jurisdictions to have a building block in which they can work with. So jurisdictions across all continents, Africa, Europe, North America, the Asian continent and the likes, for us to have like a building block, right, to facilitate sustainability reporting. That's essentially why we have IFRS S1 and S2 from the International Sustainability Standard Board. Now, to round this off, before we have the panel discussion, we've had insights around how the IFRS S1 and S2 came to being from the Conference of Parties 26. Now, what does S1 and S2 entail? S1 is general requirement for sustainability related, general requirement for the disclosures of sustainability related financial information. So S1 is saying, as a company, take your financial statements, right? And take your sustainability activity, tie information together rather, in what you have in your financial statements and your sustainability activity. We don't want you to state that as a bank, you are redirecting your financing from energy or carbon intensive industry into less carbon intensive industry, and we cannot see it in the bookings of your loans and financial instruments in your financial statement. So S1 is saying that we'll begin to look at your financial report and look at your sustainability activity and connect the information together. Hence the same general requirement for disclosures of sustainability related financial information, right? S1 also gives the 4 contents, which S2 does. So we'll be looking at your financial statements and your sustainability activity as a bank, for instance, or as an oil and gas firm, or as an hospitality firm, or as an SME, in whatever industry, or as a fast-moving consumer good industry. We'll be looking at your financial statements and your sustainability activity across your governance, across your strategy. What are the plans in place on the long term to achieve whatever goal you've set out for as a sustainable company? We would also assess your risk management. How do you profile your risk across attaining those goals in terms of sustainability? Also, then finally, we'll look at the metrics and targets that you've set as an entity, right? So S1 and S2 looks at the 4 contents around risk management, governance, strategy, metrics, and targets, right? Then S1 finally gives activities or details around reporting reliefs and exemptions, right? That's what S1 primarily entails, just to breeze through that. S2 is climate-related disclosure. How does your business model, how does the product or value you sell as a business affects the climate? That is, we're looking at a contribution to methane, carbon emission as a business. So you look at your business, your activity might be direct or indirect. That's why S1 looks at things around your scope disclosures, scope 1, scope 2, scope 3 disclosures for your greenhouse gas inventory and emissions, right? S2 looks at that. S2 also looks at the 4 contents across your strategy, risk management, governance, metrics, and targets, right? And how these things affect your contribution to carbon emission, methane emission. So when I say carbon, methane, CO2, carbon, those emissions, that thing, emissions into the air, S2 essentially looked at how your business contributes to that directly or indirectly. Then, of course, reporting reliefs and exemptions for S2 is what the standard essentially encapsulates. So these are this is like a broad overview of what S1 and S2 entails, right? Then we can just delve right into the panel discussions. So let me just hand over to our facilitator, Temitope Kolade, to take it up from here. Thank you very much, everyone. I'll be back shortly.
Thank you very much, Kayode, for the insightful presentation. we've come to that very exciting aspect, and I like that I'm doing this with people who are very knowledgeable with respect to things around financial transactions. I have Mr. Ovete, who is the head of financial shared services at Lafarge Africa PLC. I have the team lead for sustainability at Stanbic IBTC, Ms. Okpeyemi Ogunkoya, and of course, we're to have Dr. Rabiolo, the Executive Secretary of the Financial Reporting Council of Nigeria, but for some reasons, he was unable to attend, but he sent us a very reliable and dependable facilitator as well and panelist, who is Dr. Abubakar Razak, representing the Executive Secretary and CEO of the Financial Reporting Council of Nigeria. Dr. Abubakar Razak is the head of the Sustainability Reporting Unit of the Financial Reporting Council of Nigeria. And of course, my very own Kayode Olaide, who is our own lead for accounting services at Andersen, is also on the panel. So we'll go right into the conversation. Kayode, you've said quite a lot with respect to sustainability, the conference of parties and all of that. Can you start by even telling us what the implementation date for sustainability reporting in Nigeria is by Nigerian companies? And the reason why I ask this is when you have this conversation, some people are likely to think, what is all this views about, sustainability reporting? How does it impact me? I already have some independent reports that I already give and all of that. Why do I need to be bothered about this? Is there something? And I know we should be expecting some statement from the Financial Reporting Council of Nigeria on how they're also ensuring that maybe people indeed take the implementation date seriously. But what do you think, or what exactly have you read and seen with respect to the implementation date for sustainability reporting for Nigerian companies altogether?
Thank you very much, Temitope. I know that the best party would be our regulators, but just to quickly chip in, maybe before I hand over to Dr. Rabiu's contact to also just shed more light on that. But what Nigeria has is Nigeria, again, we are first adopters, and I like to brag about that. We should, when we have the chance to brag about Nigeria, we should brag about Nigeria. So in Africa, we're sort of like the first adopters, and to declare officially that we're going to be adopting S1 and S2. And what we currently have is that 2024, there's going to be a voluntary adoption so companies reporting 2024, their year end is a voluntary adoption for companies in the country to, adopt the provisions of IFRS S1 and S2, also utilize whatever exemptions or reliefs they would like to utilize. So for instance, you don't need to report on IFRS S1, and you can pay more attention to S2, if you want to report for 2024. But as of today, the Financial Reporting Council of Nigeria has sort of established a 5-year roadmap, like a mandatory phasing for adoption of the S1 and S2. So we should kickstart by the end of this year. So there's a voluntary adoption for 2024. Then there's a mandatory adoption for 5 years, which is like a phased plan by the Financial Reporting Council of Nigeria. I don't know, before I hand over to the FRC, and I would also like to mention that for the voluntary, what you stand to gain, because of course, when you report, there's a cost to it that comes with it, right? But if you're a voluntary adopter, you're a first-time adopter, you are one of the early adopters, early birds to do this, you stand a lot to benefit or gain with your investors, your stakeholders, from doing this without necessarily being overburdened with the cost you're going to be incurring. This is to our audience, because there's a lot of benefits you stand to gain if you're a voluntary adopter and you are an early adopter for 2024. You are reporting 2024 and you're saying you want to adopt 2024. There's a lot of benefits that are, intrinsic and extrinsic, your investors, your regulators, your supply chain, your stakeholders, your branding, being an early adopter. So for Nigeria, there's an early adoption plan for 2024. And then by the end of this year, there's like a 5-year roadmap that will be like a phased plan for adopting for all corporations in Nigeria, and it to be mandatory as be stipulated by the Financial Reporting Council of Nigeria. Thank you. I don't know if the regulators actually have an addition to that.
Yeah, Dr. Abubakar. We are unable to hear you yet.
Hello, can you hear me now?
Yeah, very well.
Okay. Good morning, all. My name is Dr. Abubakar Razak. I stand in for Dr. Rabi Olo, the Executive Secretary, Chief Executive of Financial Reporting Council of Nigeria. And he has sent his apology. He actually prepared for this all-important webinar, as important to us at FRC, as important to various stakeholders. But it's inevitably absent because of certain function which has to be there. And I'm so happy to be here. And this event, let me thank Andersen for organizing this kind of all-important event, because it's very important as we are cascading information that's going to be useful for entities for their financial reporting. Yes, talking about adoption of ISSB standard, what Nigeria did in 2022 was very, very a landmark. Was Nigeria made history by declaring the as a first time as early adopter. And why do we did why this happened? Just like the Mr. Kayode has explained, the world was in a state of confusion when it comes to sustainability reporting, because there are a number of frameworks that people are using, different entities are using, which makes it difficult for comparison. Comparability becomes very difficult, and when comparability becomes very difficult, then transparency and accountability also be very difficult, because you'll be doing the way you want rather than the way it should be. No platform. So Nigeria was so excited that a global baseline is being created by IFRS Foundation to harmonize the practices of sustainability reporting. So when we declare our intention at COP27 in Egypt in 2020, we meant what we said. And working the talk, coming back to Nigeria, we created a think tank professional adoption readiness working group for stability reporting in Nigeria, ARWG. The ARWG comprises of the best brain and major stakeholders in financial reporting and corporate governance in Nigeria. Talk about the big four, the premium time companies, main regulators like NGS, SEC, to come and look at it. How can we actually seamlessly implement sustainability reporting in Nigeria, being for the first time in a manner that can be comparable and gender transparency. So this group worked tirelessly for more than 8 months and with a retreat to harmonize their opinions. And they come up with a document, roadmap document, which guide the implementation of sustainability reporting. The roadmap guideline actually define three routes to adopt sustainability reporting in Nigeria. The first route is early adoption. As we all know in accounting, early adoption means a date that is a date before the effective date. As we all know, the effective date for sustainability IFRS S1 and 2 is January 2024. But some companies have elected to adopt it even before the date of 2024 date. So these are called early adopters. Some companies in Nigeria, they have indicated that, look, I want to do it even before the effective date. And do you know in accounting, early adopters always encouraged. So they are adopting it. And those people that are adopting it, they are the first route of how to start sustainability reporting in Nigeria. So for the financial year ending 31 December 2023, they declare early adoption, meaning that by this year, when they are having their financial year, we should be having the first set of companies that have done early adoption. The second route is voluntary adoption. Voluntary adoption is a learning stage for entities that want to adopt before mandatory time, and the periods between 2024 and 2026. The essence of this is to make the company prepare, because sustainability is not greenwashing, like Mr. Olaide just said. And you need to have sustainable practices, which you have to report, because if you don't have sustainable practices, it will be difficult for you or if not impossible, to report sustainability. Therefore, the voluntary stage period is a learning period where organizations will now adopt between 2024 and 2026. And finally, we have mandatory adoption. This is time for all and sundry to actually adopt. That will be in 2027. So it is expected that by 2027, all companies in Nigeria will start to be reporting sustainability reporting in line with harmonized ISSB standard. You will recall that we have different legal frameworks which are already in use before now, which are already causing confusion, making it difficult for comparability, making it difficult for accountability and transparency. And for investors' sake, investors are confused because you cannot compare company A sustainability reporting with company B. And a lot of companies like we know, they do what we call greenwashing, whereby you just go and do pictorial glossy pictures of what you are not actually doing. Now you are going to be doing it, not only doing it, you are going to be seen to be doing it, because there are going to be an assurance. So like, in summary, there are 3 routes for adopting sustainability reporting in Nigeria. The first one is early adoption, which is the first period for those who have elected on their own to adopt for the accounting period ending at 4 December 2023. So that by this year, we should be having those companies coming up with their sustainability reporting. And the second stage is the voluntary, between 2024 financial year and 2026. And finally, we have mandatory, which is compulsory for all entities within the 2027 financial year. Thank you.
Thank you so much, Dr. Abdulrazak, for clearly stating out the timelines as advised and by the Financial Reporting Council of Nigeria. Just maybe a follow-up question to that, still to you, Dr. Abdulrazak, is to ask what you would really advise companies to begin to do. Yes, there are those that would want to take the step of being early adopters. There'll be those who would say, you know what, I'll do voluntary, and then some people would wait till dying minutes. Even if they choose to wait till 2027, for instance, what are the things they should begin to do? Or should they just fold their arms until 2027, would you say?
Okay. Thank you very much. If you have watched us closely from the COP27, what we have been doing is advocacy. And we are meeting the major stakeholders. That's why if you look at our ARWG, the Adoption-Related Working Group, we have carried along major stakeholders, the NGS, the regulators, the Big Four, and some academia, professional bodies like ICANN, ANA, and the rest of them, so that it will not be as if it will be we carry everybody along, so that it will be a phenomenon that everybody will understand, so that all these bodies we have invited will cascade information to all and sundry. So one thing we advocate is knowledge base. You cannot do sustainability reporting if you don't have your ESG practices available in your company. You must have your practices, sustainable practices. Is from this you do what you now report it. So what we are advising company now, if you cannot join being early adopters, you can join voluntary. Voluntary by start practicing it. If you look at the standard, there are a number of reliefs which we are going to talk about, so that it's not all fit all. You can start at a point, start developing and improving your practices. So what we advise from the regulatory point of view to entities is to start now and to have this cultural behavior or corporate behavior of compliance by trying to look at how do I do it, getting expert to, because if you look at the sustainability reporting, is to the advantage of business, is to unlock capitals, is to attract investors to invest in your company, is to cascade information about what you are doing. Because when you report social structure, what you are doing, your relationship with staff, with host community, it entices investment. And when you take care of the environment takes care of you. With your water management and the rest of the when you look at it, for sustainability, is at the centerpiece of human development. Therefore, it is good for the business. So we will advise companies to start it now with whatever the information they have and graduate with it as time goes by. Thank you.
Thank you so much, Dr. Abubakar. I'm moving to Mr. Itie now. One of the things that Dr. Abubakar has said to us clearly from the conversations is that you really want to start now, right? And I want us to take a bit of step back. You see, at the Conference of Parties 26 in Glasgow, Scotland, the ISSB was birthed. Would you say it was a timely intervention in the global capital markets? Particularly because of some of the things that Dr. Abubakar has said. He said it is for your good as companies, and then he goes on and on trying to get people to even start before the mandatory time that has been set by the FRCN. So would you say that it was a timely intervention by the ISSB that we now have in IFRS S1 and S2, and to what extent do you think that's even a step in the right direction if you say this?
Okay, thank you, Temitope, and thanks, Dr. Abubakar. So for me, I would say there's never a better time to start than today, right? Because if you look at the issues around sustainability, you are looking at equilibrium. You are looking at how you run a business today and ensure that tomorrow that business is still running. How you ensure that you don't deplete the resources available today so that the next generation will be able to still run that business. I think that's the whole concept of sustainability. But you cannot do that without putting numbers to it. And in putting numbers to it, you are able to get that communication across to your investors, because at the end of the day, whether we like it or not, the whole world is going into that particular space of sustainability. You are having investors that are only going green. There are some people that are interested in the impact you have in your environment. And also, how do you communicate that if you don't have a reporting standard for it? So for me, I would say, while it's the case of the cat and the horse, but you need the available data to be able to take any decision at any particular point in time. And how do you start building your data? Do you want to start getting the incentives first of sustainability, or do you want to start doing the reporting? Because I see a lot of people that ask questions and say, hey, I see some companies doing sustainability reporting. What is the benefit? And I think that's the question. What is the benefit? What is sustainability? But you need to be able to gather this data so that the regulatory environment, and if you really want to look at it, sustainability reporting is something that even the public sector cannot do on its own. It has to be a combination of the public sector, the private sector, the regulatory. All the stakeholders need to really come together to make this work. And I think that's why the time frame of 5 years really looks good. In terms of early adoption, I mean, you look at the timing is good for me. I think we should start putting the reporting together. We can also take experience from when IFRS was reported in Nigeria. Even if Europe and some other countries have started in 2005, Nigeria started in 2012. And for the first couple of years, we were seeing different sets of financial statements that some we couldn't really understand. But within 5 years, you could see that harmony, you could see that understanding, you could see the impact on the assurance side of the reporting. So I think if we follow this direction, we're also going to get there. In terms of the global impact, like, you know, IFRS now, for example, every company, you pick up a financial statement in Nigeria, you pick up a financial statement in Europe, you review together, you are able to make sense out of it because of common standard. The same thing with sustainability, S1, S2. By the time we get there, we're going to be able to have that uniformity, proper understanding. And at the same time, the regulatory part is really where I think a lot of efforts will need to be put in, because we don't just want to do reporting for the sake of reporting. And for you to be able to achieve that, you want to make sure that there's some level of compliance, and also that will be driven by incentives and penalties. How do you give penalties for those that are not compliant if there's no standard or there's no basis for judgment? And at the same time, how do you give incentive if there's no standard? So I think with this particular introduction, we're going to get there gradually in terms of the regulatory part. And also a lot of opportunities will come up. A lot of times we talk about the carbon credits, we talk about the carbon offsets. It's something that is new in Nigeria. In some countries, at the beginning of the year, you take your amount of money you have, you purchase your carbon credit, you see how much you can utilize during the particular period. And if you're not able to fully exhaust it, you can trade it. So these are opportunities that will come up when we start implementing the standard, and you see that there are other business opportunities that will come to the companies, especially for those that are wanting to go green. Thank you.
Thank you very much, Mr. Eti. You're already highlighting the risk, some of the risk and opportunities for us. And apparently, when you talk about sustainability, it's not something we can capture in just a very short conversation like this, but you've done justice to that question. I'm coming to Ms. Ogunkoya now. And again, maybe to make some of our audience have a feel of what we're talking about and how broad some of these conversations could be with respect to, sustainability. We typically talk about scope 1, scope 2, scope 3 emissions, and some people are wondering, what has that got to do with my business, right? So when you look at the provisions of the International Financial Reporting Standard S2, you highlight certain disclosures that you should have around those various scopes of emissions of greenhouse gases, right? Basically coming from the GHG, the Greenhouse Gas Protocol. Can you basically tell us what the relevance of these climate-related disclosures are to businesses, especially maybe for you that work with people within the capital markets, the banking sector, and all of those? What does this even mean? Do businesses need to bother so much about climate-related disclosures and of course, greenhouse gas emissions?
Okay, thank you, Temitope, for the question. So basically, before even going into the relevance of disclosing scope 1, 2, and 3 emissions, I'd first like to demystify the scope 1, 2, and 3 and what they really are. So when we speak of scope 1 emissions, we are speaking of emissions that are directly from the organization within the scope of that organization's operations. And when we speak of the scope 2 emissions, that's where we refer to emissions associated with energy and the purchase of electricity, while scope 3 has to do with upstream activities and downstream activities from suppliers to clients, third parties, vendors, and the likes. And the emissions relating to all of this is one of the requirements of the IFRS S2, speaking to how we disclose all 3 scopes according to the GHG protocol. And the first relevance I'll see for this would be the increase of transparency, really. If the S2 is able to create that standard, or when companies begin to adopt the S2, that standard will be there. There will be increased transparency around emissions or greenhouse gas emissions that relate to all 3 scopes of emissions. And I see that as an opportunity for investors to see what are the performance of companies as regards to carbon emissions or greenhouse gas emissions, because greenhouse gas emissions have direct impact on climate change. It has an indication of how the business is performing as it relates to climate change. Another thing would be around cost savings and risk management. Organizations that are able to comply by the IFRS S2 would be able to identify those hotspots where they can conserve or save energy, be it greenhouse gas be it green building embracement, or even going into more solar and renewable energy sources to save some costs and also have a positive impact on the environment and mitigate climate change. Thirdly, the disclosures of scope 1, 2, and 3 in the IFRS S2 as stated by the standard would also assist organizations in, benchmarking their performance with others. As it stands, various organizations, use consultants to help determine their emissions, disclosing it in the sustainability report. But that's basically according to various standards, be it the GRI or the TCFD and the likes. But with the advent of the IFRS S2, we have a broad standard, a global standard for comparison and benchmarking across board and for the interest of our investors, which would give that competitive advantage. You have ability to demonstrate that the organization is committed to ESG practices, is committed to, attracting more investors, showing that the performance of of the carbon emissions or the greenhouse gas emissions are being well mitigated or taken care of. So I see that as basically an opportunity to future-proof the business, against climate risks, to future-proof the business against even environmental risks associated with excessive emissions or excessive carbon emissions. So there are a couple of ways it can be of benefit to organizations that adopt this. Thank you.
Thank you so much for that detailed response. I'll come back to Dr. Abdulrazak. I'm concerned about what the FRCN stance is with respect to maybe when certain companies, and again, I say this because, we'll typically talk about a carrot and stick approach in Nigeria, reason being that some people will not move until you move them, right? And some people, even when you move them, they don't want to move in the right direction. So people will then begin to talk about having the carrot and the stick. As much as there are sweeteners and you're telling people, you're encouraging them, oh, this will be very good for your business. And you've highlighted that already. My question to you is what the FRCN stance is on regulatory sanctions for non-compliant or maybe not fully compliant entities in Nigeria when we then begin to have the adoption time lapse, or would it be business as usual?
Thank you, Temitope. Thank you, Temitope. I think like I said, what we are trying to do is to do a lot of advocacy and to carry a lot of entity along, because we believe that compliance should come naturally, and you don't need to use carrot or stick. For compliance is part of business strategy, because if you don't comply, you expose not only to yourself, you expose all other your competitors to risk. Therefore, the use of compliance is something that we take very seriously. But before we do that, what we have been doing ever since we announced our intention to do early adoption is to do advocacy. And we have carried along all the major stakeholders to ensure that we understand sustainability practices. It's not new, it's not totally new in Nigeria. When you look at what we have been doing, what is sustainability ESG? We have been doing a lot of environmental accounting before now. Those companies in manufacturing, company and construction, they've been doing a lot of environmental accounting. Then when we talk about CSR, many companies do CSR, as well as we are familiar with the content of NCCG, where we do governance reporting. Nigeria, yes, they are not entirely new. And we believe that what we are doing, what IFRS are doing, is to package it in a way that is now a baseline for harmonization and comparability. So it's not totally new to entities. And we believe that given that time given that different route, we believe by the time we adopt is now mandatory, everybody will follow. So we are not looking at a sanction. Actually, we want people to understand it first, work by it, so that you don't have to blame anybody when time comes. Thank you.
Thank you very much. I'm excited, and I'm sure a lot of my audience is excited that you're not looking at sanctions just yet. I'm going to come to you, Coyote, looking at the fact that now it's a case of just selling it and telling people this would help your business. One thing that is clear is also that we have better practices, and we could even then have best practices, so to speak, right? So what would you say in terms of what the best practice should be in trying to help drive those climate challenges that we have in Nigeria to solutions, and bearing in mind that some people will say to you that we are not so much of the problem when you think about climate change globally. We are maybe just at the receiving end, and we've seen those things where we find ourselves at the receiving end. So in clear terms, how can ESG best practice help drive Nigeria's climate change challenges to solutions?
Yeah, Thank you very much, Temitope. You see, you've hit the nail on the head by mentioning that when it comes to the largest contributors to climate crises or climate issues that we have globally, Africa is really down the cadre. We're not top at all on the cadre, right? Our net contribution is really minimal, and the reason is very simple. We are not industrialized as the Western world, and Asian world and whatnot. So that what that implies that Africa, in fact, if we recall in COP27 in Sheikh, Al Sheikh in Egypt, they even had to, there was a resolution to even sort of like contribute for the African continent, like a sort of compensation for the African continent, sort of like a climate fund, African climate fund, and that was because the whole discussions were around Africa has probably been at the receiving end, for the broad and wide range industrialization globally. So, but that does not still take us out of the equation anyways. So in terms of best practices for Nigeria, as a top reporting country, and of course the most populous Black nation in the world, a lot of attention will be placed on corporations in the countries that have the most environmental footprint, that have the most environmental impact, right? So these things around climate, when it comes to climate, the what we're referring to is very direct and simple. We're referring to your methane contribution, right? Because ESG looks at the environmental bit, which is more related to climate, right? Then we have the social and the governance, which is more relating to human capital. Then, of course, corporate behaviors and corporate activities of companies. But when it comes to climate, the construct of the ESG is what a lot of attention is being placed on. So the best ESG practices, for companies across different industries would be more around industries that have the highest environmental footprint, right? In terms of net carbon footprints, net carbon emissions in the country. So a lot of attention will be placed to companies around the oil and gas sector because of their activities around exploration and the likes. Of course, financial services too, because they are the ones that finance, they are the ones that finance, for instance, the oil and gas space, or finance major contributors to carbon emissions in the country. Also possibly those in the agricultural space, altering the natural flora and fauna of the environment and whatnot. So for best ESG practice, that's to convert challenges to opportunities, would look at things around green financing, which quite a number of FUGAs, top tier banks have. We have, for instance, Opeyemi is on the call, so I'm sure she possibly can even give us more insights around what banks have done, in terms of green financing. But I know of that, most of these are first-tier banks have floated green bonds, to finance environmentally friendly, green projects, turbines and the likes, and whatnot. Also, you see the oil and gas space now looking more into renewable energy, natural gas, exploration of natural gas and whatnot. So in terms of the best ESG practice that can turn challenges to opportunities, a lot of attention needs to be paid to the major carbon contributors, or those that have the highest carbon footprint in the country, because they are the ones that can necessarily drive opportunities, or convert challenges to opportunities. So I would say that to wrap this up, I would say that for conversion of challenges to opportunities in the country, there's a lot of inputs and contributions to be made by those that are considered to have the highest environmental footprint in the country. So essentially financial services, oil and gas, agriculture as well, are considered to be, high net contributors in terms of carbon emissions. And they have a large role to play in terms of how they invest in renewable energy, how they invest in more green financing even blue financing in terms of the ocean bodies, you know. So we have the likes of blue bonds these days, which are not so pronounced in Africa, you know, that banks can begin to look at, you know, to float and invest, and of course aid climate, and of course aid the natural space and ecosystem. Thank you very much.
Thank you very much, Kaide, for the detailed insights. One of the things that you maybe get concerned about sometimes is that even if you're not contributing so much and your practices are best in nature, it could then mean, just like you said, you could attract funding, which is why I believe the FRCN also stepped in to say, let's be early adopters, let's be on the table for the conversation. And so we can tell them that, see, it's a global village after all. As much as we don't contribute this much, we have the best practices, and then you should give us the funds to develop and to have sustainable practices within our own sector, and we all then contribute to a better world after all. So at this point, I come back to Mr. Ite, and I want to find out what you think about the relevance of the IFRS S1 and S2 provisions to what companies already report in their financial statements. I know that, not putting you on the spot, your company already does some sustainability reporting. What do you think is the relevance of what you already do, or what you think, or what you see other companies already do to what the provisions of the IFRS S1 and S2 now says should be done? I know that Dr. Abdulrazak has talked about transparency, comparability, and all of that, but do you think these provisions have any additional benefit, or what exactly is the relevance?
Okay, thank you, Timmy Tokwe. In terms of the relevance, I mean, it's more of a case of harmonizing what has been reported in the past and what will be reported in the future. Because if you recall, when it comes to sustainability, it's different for every business. And that's why, if you remember when Dr. Abubakar was speaking, he talked about the business model of different companies. And that's why, if you look at all the stakeholders, if you want to report sustainability, you have to start from your business model, your integrated practices. So what I've seen from my own experience is that for every entity, you have to look at it from different angles. Like some people have what they call the sustainability pillars, which breaks down their activities to different layers in which reporting can make sense to people, because you don't want to report for the sake of reporting. And a lot of people ask questions. So if I'm involved in sustainability, does it mean I should just start planting trees? Or does it mean I should just start going green? No, you have to tie it to your business model. You have to tie it to the value chain of your organization. A typical example, if you look at it, let's say you have a sustainability pillar of climate and energy. You want to look at your CO2 emission. How are you measuring it? Are you increasing the level of CO2 in the environment? Are you reducing it? Right? So if you come up with such strategies, okay, you know what, I want to measure it every year. And if I set my target as, okay, this year I emitted about, let's say, 1,000 kg of CO2. Next year I set another target, I want to reduce it. So you see, with the business model, you begin to identify these steps and take it gradually. And mind you, you might also have some incentives, or even the regulatory body can say, you know what, any organization that emits more than a certain amount of kg of CO2, you pay this amount as taxation. So there's so many ways to go around the implementation of this particular standard. You also look at your circular economy. So you know what, in terms of what you are taking from the natural resources that you're not able to replenish, are you able to measure it? Your impact on waste. Like there are some organizations that will tell you they are converting your waste today and they're making a lot of money out of that particular waste. They are using waste to create bioenergy. They are using waste to create products, right? Which are going back into the market. So when you look at your business model and you look at it end to end, you begin to ask questions like, what part of my business can I start to substitute for renewable energy? You can look, you might say, oh, I'm not a major manufacturing company. I don't get involved in emission of CO2. I don't do so much. But how are you powering your business? Even if you're an IT company, how are you powering your laptops? You see that somewhere along the line, everybody will find themselves trapped in the whole line of this sustainability and carbon emission. And with the right business model, you're able to identify what impact you are making at any particular point in time. You see a lot of organizations now, they are going green in terms of their power. That's you know what, all your warehouses, you want to generate power by the use of solar. You don't want to use generator anymore. You don't want to emit carbon CO2 anymore. You can see that you might not be a major manufacturing company that is polluting, or you might not be an oil company that is getting involved in a major way, but somewhere along the line, you can catch yourself all in it. So then, if you have a proper business model, you begin to take decisions within, and it starts to be strategic. So meaning that sustainability should not be a thing of just, oh, when it's time to report, where are the accountants or where are the auditors? Come put numbers together and report. No, it should be part of your planning. It should be part of your business process, and it should be part of your leadership. And you see, one thing I like about sustainability is that when you drive it from the angle of leadership in any organization, you begin to see changes. I say this because we are human beings, we are social animals, and we always follow patterns. If you go to a place where it's very neat and you see people are not throwing trash on the ground, what do? You begin to follow that line. If you go to a place where you have the various bins, you have the green, you have the blue, you have everything segregated to say, you know what, this is the type of waste you put in here. We want to put bio waste in here because we're able to use this to get renewable energy. People will begin to follow through. So it's something that you have to drive from the leadership part, but your business model as an organization is very, very critical. And for those companies that are lucky to be integrated or affiliated with foreign organizations, which have already started these practices, it actually makes it a little bit easier for them compared to the Nigerian entities that will just be starting from scratch. Thank you.
Thank you so much. Thank you so much. I come to Ms. Ogunkoya. I want to know, and I know, I mean, Mr. Itie just made mention of companies having certain pillars for compliance and all of those. Can you also give us some brief insight into how disclosures on a company's strategies, its risk management framework, its metrics and targets, and of course, governance, how do all of those fitting into sustainability reporting and proper sustainability reporting, I would say?
Okay, thank you, Temitope. So basically, these 4 core pillars, as I would call it, are the main crux of what the IFRS S1 and S2 speaks about. So I'm going to start with governance. Governance, companies can look at disclosing, information regarding their governance structures. What are their board oversight? How is the board taking oversight from, like Mr. Itie has mentioned, leadership is very important in order to see that we drive sustainability across board. So what is the governance structure in place? These are one of the things that should be disclosed. And I'm sure a lot of companies that are involved in sustainability reporting are already doing this. So speaking of what is the responsibility of top management, and also how are the top management and even the staff, how do they take how are they able to be accountable for their actions within the organizational structure? So just beyond actual sustainability activities, as an organization, as an entity, what are the accountability or grievance mechanisms that are put in place? What are the responsibilities associated with various levels of leadership within an organization, and also the responsibility of the board, even if having a dedicated sustainability steering committee, or even a risk management or a board risk management committee that seeks to having reports from time to time as regards to sustainability activities within an organization. I think that's the first way to address the governance pillar of disclosures. Then moving on to strategy, which is actually quite important. That is determined across board at the top level to identify the specific areas which are material to an organization's operations, where the company would identify sustainability activities. For example, at my organization, Stanbic IPTC, we have identified 4 core pillars for sustainability at a strategic level, which speaks to strengthening leadership for governance, for sustainability governance, building environmental resilience, enhancing social relationships, as well as expanding business models. So these are the 4 core pillars that we use to approach sustainability. And this helps us to manage our risks and opportunities as regards sustainability operations. And that brings me to the third concept, or the third segment of sustainability disclosures as it relates to the IFRS S1 and S2, which is a risk management framework. So organizations are to establish a risk management framework, or even an environmental, social, and governance risk management framework that will help to set out the guidelines and the framework, define the lines and the boundaries for which sustainability opportunities and risks are being assessed, are being monitored, or even mitigated within the organizational scope and operations and their space. Then lastly, we'll speak to the metrics and targets, because it's all about measurement. It's all about the numbers, like my colleagues have said earlier. It's all about having those targets that have been set, and then identifying ways to measure your performance on a year-on-year basis or a monthly basis, depending on how it's being determined within internally. So these metrics and targets can be identified according to the various pillars of sustainability, or according to the various core pillars as defined by this organizational strategy. It can be broken down so that you can have year-on-year or daily operationalization of the sustainability goals that you have set for yourself as an organization. So the metrics and targets will help to identify where do you want to be, and where are you, and what are you going to do to get to that level. So I think basically the framework of the S1 and S2 helps us to entrench transparency. It helps to improve accountability of organizations that are seeking to disclose according to these standards, and also to ensure continuous improvement from time to time. For the voluntary disclosures that would be from this year till 2027, it's a time for improvement, it's a time for advancement, it's a time for us to learn from each other and rub minds, before we have the mandatory years where everyone has to be on board with the ISSB standards. Thank you.
Thank you so much. I think there's something that I would like to emphasize from what you have just said. There is someone that will typically remind us at Andersen that what doesn't get measured doesn't get done. And I like the fact that you talked so well about the metrics and the targets. But the other thing that people want to see is that when you say, yeah, we've set metrics, we've set targets, what do we begin to see? And we say, oh, this really makes a lot of sense, the adoption of IFRS S1 and S2. Do you, as an individual, see nature, people, and the socio-economic space getting better with the adoption and implementation of these IFRS standards? And how?
Oh, sure, definitely. Definitely, I see the adoption of the IFRS standards having, shared value across board, shared value for the environment, shared value for society, and also for, for the economy as a whole. As a developing country like ours, which is Nigeria, we have a lot to gain. We have a lot to gain. We stand a chance to obtain the best from these kind of standards, because we are more or less at having a clean slate. We haven't gone really deep into carbon emissions, coal mining, and coal power generation and the likes. So I see that by encouraging companies to engage more in adopting these standards, definitely environmental footprint management would be improved across board, as well as improve labor practices with regards to the people, with regards to society. There will also be more, involvement of communities within the communities or within the society where we operate. The grassroots would also get involved. All our stakeholders basically are going to get involved in what businesses are doing, because there is increased inquisitivity, if I have to say that, people want to know what are these companies doing, what are they doing, how does it affect me, how does it affect the society, how does it affect even my livelihood. So it's going to gain public trust, help to improve brand image of organizations that seek to adopt these standards. And then for the social economic environment, like you have mentioned, so adopting these standards would help to improve, a more sustainable and equitable future. It's going to make development, basically sustainable development, to thrive as a country, which is what we basically need as a developing country, Nigeria.
Thank you so much. Thank you so much for those very great responses. At this point, I want to remind the audience that we would attend to some of your questions that have come in already, and you're still free to drop in some of those questions. In another 5 to 10 minutes, we'll wrap up the questions and answers to the panelists, and then we'll take some of those questions that you've raised. But just to go a little further, I'm coming to you, Coyote. What effect does sustainability reporting have on taxation? I say this because, I just want my audience to have a broad understanding of what sustainability means, not something that is maybe just specific to one. And I like the fact that Mr. Iti talked about how even impact on IT companies and several others. I'll be coming to you shortly also to make us understand whether there are some exemptions or reliefs here and there. Because when you say it applies to all, the question in the mind of very many companies would be, to what extent do I just stick everything and apply the way the manufacturing guy that I've seen their sustainability report does it, or the banking guy that I've seen their report? Or are there some exemptions or reliefs that I can get here and there, depending on the sort of operations that I'm into as a company? But Kaide, I'll come to you now to tell us a bit about how sustainability reporting really has anything to do with maybe taxation, and added to that is, could it have any impact on even people within the pensions industry, for instance? Right.
Thank you very much. Thank you, Tim Tokwe. So yes, it does. Right. So one thing I'm sure that our esteemed audience have noticed so far from our conversation is that sustainability is beneficial to the business. So when taxation is, you are paying part of your bottom line, right, to the government. So when you become a more sustainable or socially, environmentally responsible company, the after effect is that there will be some kindness from regulators to you. And the reason is very simple. You are helping to improve nature. So to drive it home, I know that, for instance, section 39 of the Company Income Tax Act gives like a 5-year tax holiday to companies that are heavily dependent on natural gas. If you use natural gas to fund your business, right, section 39 of CETA gives you a 5-year tax holiday as a company, right? So because the use of natural gas is sustainable business practice, you're not emitting carbon, you are a less carbon emitter, a net carbon emitter, you are lesser on that cadre, right? So you be using natural gas, for instance, gives you that 5-year, tax holiday, right? Also, there are, incentives around capital gains and the likes for assets that are, do not emit, or that are sort of like renewable energy and the likes, right? That are, in the Nigerian context, within the, Federal Inland Revenue Services and also the Internal Revenue Services across all states. So also there are benefits around, carbon credits. Carbon credits there's a market, for carbon credits, it's not so pronounced in Nigeria, but we have them, particularly companies in the oil and gas space. If you have emitted lesser than the cap that is given to you, for instance, there's a particular benchmark or cap that is given to you. If you emit lesser, you have like a sort of like a credit that is, that you have access to, that you can actually sell on the carbon markets, like a certificate, right? Just like your bond or share certificate that you can actually sell, right, for companies to buy, because you have emitted lesser than the cap that has been given to you, as an oil and gas firm. So these are incentives that people get, that companies or corporations get, rather, from being a sustainable, or from being a more environmentally or socially sustainable company. For pension industry, you know, what sustainability does or how it's beneficial to the pension or how it is relevant to the pension industry is that, you know, what pension does is that there's a particular defined contribution plan that every employee has. So, and that goes to a particular pension fund administrator, right? And there are managers that manage those funds. So every manager has an assets under management that they manage, an AUM, which is which encapsulates all of the pensions that are contributed, you know, by different corporations and the like. So these days, pension industries are now beginning to look at what they invest those funds with or where they invest those funds in, right? So they are looking more into investing in greener investment that are more sustainable, because what the pension fund manager does is that they keep your money, just like the bank does. They keep your money and they help you to invest those funds so that, you know, upon retirement, you have like a balance that you can access. And that balance is an accumulation of the savings from your employer and also return from investment that it made. So these days, pension industries are beginning to look more into sustainable investment or sustainable impact investments based on the funds that have been contributed by employers. So for pension industry, their attention is more on the pension funds, their asset under management, right? And the investments or portfolios that they are beginning to invest in, which they are now beginning to say they want to be greener, they want to be more sustainable investment, right? Investments in agriculture, green economy, investments in renewable energy and the likes, you know, peculiar ones, so for familiar ones, right? So that is how sustainability relates to the pension industry, your pension funds, and of course, investments on those pension funds for greener investment and whatnot. Thank you very much.
Thank you very much, Kylie. I just come straight on to Mr. Ite. What are those available disclosure exemptions and reliefs that organizations can seek to optimize when trying to adopt IFRS S1 and S2?
Okay, thank you once more. So putting in mind that the objective of adopting IFRS S1 and S2 for most organizations is not to be free of CO2 emission, but to achieve what we call the net zero for most organizations, right? Meaning that you are putting in as much as you are taking out to create that balance in the environment. So if you want to report on sustainability, the first thing you need to consider in terms of exemptions is the materiality, really. I think that is what cuts across every industry. Even when we do our regular reporting of your regular IFRS, the materiality is very, very key, because you don't want to be disclosing what is not relevant to the investors, or you don't want to disclose what is not relevant in terms of number to the stakeholders. So if you look at the materiality of a particular transaction in relation to your business, this also brings us back to our internal business model, our accounting policies, because it means that we need to start setting up internal policies around how we report sustainability. So that will go a long way in terms of defining our materiality. And the moment we're able to define materiality internally, then you're able to have certain level of exemptions on certain areas, depending on what materiality threshold we set in. Another area we can also look at is the aspect of the regulatory compliance. I know we have FRC here, and we've also been told that from the regulatory part in terms of reporting, we're not going to have, it's not going to be a carrot and stick approach, more like an advocacy. We're going to make sure that we encourage people to report. But at the same time, there are going to be communications from time to time, because, you know, whether we like it or not, 2027 is going to come. And by the time 2027 gets here, it's no longer going to be a case of advocacy. It's going to be a case of, you know what, you have the compliance, you have the incentive, and you also have the penalty. So in that particular time, you have to look at what the regulator is saying. So from now, I'll really say, you know what, every organization should continue to pay attention to all the publications from the Financial Reporting Council in respect of sustainability. And as a result of that, you're able to guide your own organization as far what is relevant for you, so that when the time comes, when there will probably be, I don't know if there will ever be a penalty, but like all reporting standards, if you don't comply, there probably will be one or two. So I say we need to focus on that also. Then we also want to look at the industry standard, because you see, reporting, like we said, when it comes to sustainability, will be specific to each industry. The automotive industry will have their own specific carbon emission program. They will have their specific incentives. You have the agriculture industry. You have the, just name it, the oil and gas, the construction. Like I mentioned earlier, if you really look at it deeply, every organization is part of this emission chain. You just need to identify where you belong and try to identify those areas where you can create some level of improvement or create some level of equilibrium. So if you look at it from your own industry, it's not just going to be on you as an entity to start making those pronouncements. It means that the little associations, need to come together. You're talking about the manufacturers association, you're talking about whatever it is, they have to come together and start looking at the angle of sustainability so that you can have industry standards and industry practice, considering the fact that this is the first time that Nigeria will be adopting this. Then another area we can also benefit from in terms of exemption is to look at it from the professional side. If you look at the professional firms, the Andersen and the likes, there's been a lot of experience over the years from Europe and other countries that have been reporting this sustainability. There's been a lot of knowledge gathered over this particular period to say, you know what, this is the benefit. So even as an organization, you will get a lot of benefit by working with these professionals, by getting trained and getting to understand the rudiments of sustainability. And as a result of this, you are able to get some level of exemptions. I put that some level of exemptions in quotes because at the end of the day, whatever will be necessary for you to be able to disclose or whatever is compulsory from the regulatory part, you will have to comply. Thank you.
Thank you very much, Mr. Iti. That's not to say that, you know, when you even look at the IFRS provisions in themselves, they also make for certain exemptions. For instance, you would find that as much as we talk about scope 1, 2, 3 emissions, you could get exemption from reporting on maybe scope 3, for instance, depending on the industry you're in, right? Because maybe considered as financed emissions, and maybe it's indirect, so to speak, to you. So, but thank you very much.
I can say something on the scope 3.
Okay, you want to add some things to that?
Yeah,
okay.
Let me add something to it.
Because
when you say exemptions, like take for example the scope 3 emissions, you want to look at it from the angle of available data, right? Because while you are able to get data for scope 1 and scope 2 to be able to report at this, and if you even look at the time frame, you are talking about 2050. Between now and 2050 is a long time. It just shows you that we're a long way away from having the available data to be able to have this reporting. So for me, I said, we still need to continue pushing. In terms of the exemption, it's going to be really hard to call out a specific exemption unless we've gotten to that level where we have standardized data and we already know that this information is compulsory or not. But it's going to be a build-up year in, year out. That's how I see it.
Okay, thank you very much. I'll come to you, Ms. Ogunkoya. Basically, some of our audience are interested in knowing who prepares the sustainability report. Is it the management of the company, the external editor or auditors? Who exactly is responsible for this? And maybe Dr. Abubakar will then chime in on that and other questions that I have for him afterwards.
Okay. Yeah. And this is an interesting question, actually. Management is responsible for preparing the sustainability report. Certainly, organizations management is responsible. However, this responsibility can be delegated to, specific units or teams that are tasked with the responsibility of executing sustainability at the organization. So the management takes care of, gathering the data, defining the reporting scope of sustainability reporting, as well as even the boundaries for which the reports will be provided, of course, in line with the applicable standards. And the report content itself will also be provided by the organization management as delegated. And the role for external auditors would be around assurance, either limited assurance or even full assurance, to ensure the accuracy and completeness of the information as compared to the relevant standards. So definitely, external auditors do not write the reports. The management does write the reports with delegation to, specific units that are assigned with such task. I hope that clarifies. Thank you.
Thank you, Dr. Baka. I like that you had something, especially with respect to issues around assurance. Will there be an assurance exercise when companies report on IFRS S1? How is the IFRS looking at it?
Thank you very much. What we have done in the roadmap that we roll out is to, as part of the roadmap, takes out of two major financial reporting matter. The first one is reporting, and the other one is assurance. And like I said earlier, the route for joining adoption is to either through early adoption, voluntary, and mandatory. Once you have determined the route you want to join, then you determine without what you call readiness tests. In FRC, what is readiness test? You will require to submit certain documents to FRC for us to determine how ready and how prepared are you, such as board resolution, your gap analysis, strategy for you to, how do you want to go about it. That is just for the reporting. Now, for assurance, the International Auditing and Assurance Standard Board are still working on the ISA 5000, which is the first auditing assurance standard for sustainability reporting, and they are yet to finish it, to complete it. So the way we have done in the roadmap, we have made the assurance to start 2 years after the mandatory, so that for those who that are joining in 2026, they will start assurance 2028. While those adopting mandatory will start 2 years after that. Is 2 years after that is 2029. So assurance is not starting immediately. But that does not mean that you will not do, you will just do whatever, because we have to, the financial statement has to be reviewed. But because the instrument to do assurance, to empower the external auditor, is still work in progress. And that's the reason why we are saying, in that, if you look at that roadmap, say, look, for assurance, 2 years after you started adopting, you will now do assurance. So that is the provision. But the first to do, that's why we are trying to do a lot of work in reporting. We don't want to do greenwashing. We want to get certain document from you, your board resolution. Let's see how we are board approve that, because sustainability reporting is a strategic issue. Let's see how board approve it. Then let's see your gap analysis. What have you done? What have you been doing before? What are you trying to do now? How are you going to get there? What's your strategic plan? You want to see the extent of knowledge that you have to do sustainability reporting. What are the capacity building you have done, internal capacity building, and that you have done to do. So all these things, that's why we're working a lot on the reporting, because we know that assurance is not going to follow immediately.
Thank you very much for that detailed explanation. Just one other question I'll pose to you to help us understand if sustainability reporting is relevant to small and medium enterprises or even small practicing firms when the time for assurance would come.
Okay. Thank you very much. Just like we all know that assurance is part of financial reporting process. You cannot do financial reporting without capping it with assurance, because it will lack credibility, verifiability that financial reporting requires. Because when you do it yourself, it means that somebody has not verified. So for all entity, for all reporting entity, assurance will be required. But like my colleagues have mentioned here, your mode of business and your operations level determines the kind of assurance that will be done. If you are not, like Mr. IT said, not all companies are so much involved in the environment aspect of ESG. Some will report more on social and governance, but all of us, we do some kind of reporting. So what I'm trying to say here is that assurance goes beyond, cut across all organizations. Either you are small or because as it's part and parcel of financial reporting. So you have to do it, but the level, the scope may be different, may differ from company to company and from entities to entities. And just like normal assurance, we have IFRS for SMEs. What you are requesting for SME is not the same thing you request for big companies and prime time listed company. So there will be assurance for all reporting entities as far as sustainability reporting is concerned. Thank you.
Thank you very much. Kaide, I'll just come over to you very quickly. We've highlighted a couple of benefits and maybe some risk when it comes to applying the sustainability standards. And I really want to know, where should these things be disclosed in the financial statements?
Thank you. Thank you very much, Tim Zagwe. So again, maybe I'll start working with the FRCN because it looks it looks like an FRCN question, but intuitively as an accountant, that prepares financial statements for companies, it should be in the financial statement. So the FRCN, I'm sure, would give us the template on, if it's going to be a separate document, but I'm sure it to be an addendum in the financial statement, typically come after the components, the notes to the account. So we have like a separate report that has to do with, sustainability. And recall that IFRS S1, we have a congruence connectivity of information between what you have in your sustainable practice and your financial statement. So the application of IFRS S1 and S2 should be in the annual report in your financial statement, like an addendum, and under your notes to the accounts where relevant reference are supposed to be made to the IFRS for sustainability reporting, that is S1 and S2, those references should be made. So I strongly believe that it would be inside of the annual report and not a separate document. So, but I think Dr. Razak should please just tell us what the FRCN will be, the templates that they will be, requesting. Thank you.
Okay. Thank you very much, my colleagues. When we did the roadmap, we exposed it at the floor of NGS on the 1st of February 2024, where we require comments from different stakeholders to come up with, we expose it so that people will now, and part of those questions, part of the specific matter for comment that we expose is the area of location of the report. And from our survey, from what responses we got from our respondents from different stakeholders, what they settle for, they deter to, it should be part and parcel of financial statement, which is okay, but it should be located right after the director's report in the general post financial reporting. So once you see the director's report, then sustainability report will follow. Just like Mr. Akaide said, it's going to be part and parcel of it, but it will locate that exactly after the director's report. Thank you.
Thank you very much. I'm going to come very quickly to my audience now. We'll take a few questions already. We've taken some of the questions from the participants that registered. Just a few of those questions because we're already out of time, so that we can wrap up quickly. What's the applicable sanctions? And I think that's been addressed in a way, but maybe Dr. Abubakar, you want to say one or two things about this again? Someone is asking, what is the applicable sanctions regime put in place by the FRCN to ensure compliance and avoid greenwashing?
Okay, thank you very much. At FRC, we take very seriously the issue of compliance. And because compliance means a lot to us, it means a lot to the economy, it means a lot to investors. And we don't want investors to be misled. Because if you do greenwashing, if you display what you don't have, that's why there will be assurance. Prior to now, there's nothing like assurance for sustainability reporting. So every company chooses what they want to report rather than what they should report. So now you don't have that leisure again. You have to report based on the baseline that's globally accepted. So therefore, like I said, we take seriously the issue of non-compliance, but we don't look at it from angle of a sanction for now. What we are trying to advocate, let us get it right first. Let us go along, because it's not just for the overall benefit of sustainability reporting, it's to the economy, and it cascades down to the household and firms. So we are looking at it from that angle, that it is good for business, good for economy, and we have to look at it from that angle. But after, that's why we have that long period. When it's as part of our judicial relief, the sustainability reporting starts this year, effective this year. Effective date is 2024 by IFRS Foundation. But using our judicial discretion and regulatory power, we say, no, we are not ready yet. Let us have a kind of a roadmap that take us there gradually, and every company is taking there. So that's why we have this roadmap of 5 years between now and 2027. We believe companies should have learned their ropes and should have done the right thing before that time. So, like I said, FRC doesn't take lightly the issue of non-compliance. Thank you.
Thank you very much. I'll come to you, Mr. Ite. Someone wants to know what the place of the non-financial sector of the economy is in all of this. I know you've said a few things about that. It'll be good to maybe find a way to summarize it again for this particular participant. He wants to know what the place of non-financial sector of the economy is with respect to sustainability and what effort is being made to ensure that they are covered. In his mind, they are not covered at the moment.
Okay, thank you. When you say non-financial sector, are you referring to the other industries, or are you looking at it from the angle of the business organization?
I assume the participant is concerned about maybe the FMCG, the manufacturing, and other sectors of the economy.
Oh, okay, that's nice. So, in fact, for the non-financial sector, like I mentioned before, they even hold a big role when it comes to sustainability reporting, because then you get to see a lot of activities. Those that interact with the environment more is the non-financial sector. So for them, like I said, you have to really break it down, find out which part of the industry you belong to, and start to identify those sustainability practices that you can adopt to be able to achieve the net zero in that particular environment. So for me, I'll say there's a lot. You just need to make sure that you follow the industry standard and also look internally into your business model and see where you can have substitutions. You see a lot of people talking about the 6 R's, meaning that if you're looking at your business, you say, you know what, this particular activity, what impact does it have on the environment? If it's something that will affect us negatively, do we refuse it? When it comes to this particular type of raw material, can we reuse this raw material? Can we recycle? Can we, at the end of the day, you start asking yourself those questions, but what you want to achieve is to ensure that you are able to get to that net zero at that 2050, and also make sure you comply with the requirements of Financial Reporting Council and all.
Thank you so much. Kayode, I'll come over to you. Someone is interested in knowing, I guess you mentioned it, the reporting template that was mentioned during the presentation. Is it related to Nigeria only? Was it issued by the ISSB? Can it be used by everyone? Is it accessible?
Okay. Thank you very much. So like Dr. Razak has said, right, the FRCN operates as a regulatory agency, in line with they work with the IFRS Foundation, right? So there's a global template, by financial statements, typically under IS1, presentation of the financial statements. But by the way, there's going to be like an update to it shortly, IFRS 18, so there's like a template for reporting this component. So Dr. Abdurazak has duly notified us that, for instance, these sustainability details will come after the director's report, right? So the template is going to be a globally, aligned one, not that we have our own unique, template, but it is worthy of note that one beautiful thing about the IFRS Foundation is that they still allow jurisdictions to, go by what they deem worthy or what they deem acceptable. So there's a global template, right? So jurisdiction can now decide to either go with it or do not go with it. So, but my feedback to our esteemed audience is that there's a global template, right? All companies will typically report their financial statements using, you start with your corporate information, director's responsibility, down to auditor's report, then down to your component of the financial statement, then explanatory notes to the accounts, so there's a global template to follow, which I strongly believe that the FRCN, fully aligns with. Thank you very much.
Dr. Brazak,
Hello.
add something to that.
Okay.
Yes.
Okay. Thank you very much. If you look at the nature of IFRS Foundation, the IFRS standard, they are principle based. They are not rule based, and FRC does not encourage having a format that people will follow, because when we say principle based, it means that what is applicable to company A may not be applicable to company B, and the same may be reported in such a way that we understand what the information is talking about. So if you look at the IFRS 2, the 4 pillars of reporting line is like a template, because you need to report on strategy, risk management, governance, and the risks and targets. So, but we don't encourage a kind of because we don't want greenwash. Once you give people templates, all you need is to adopt and start changing word, and that's not sustainability reporting. We want to see peculiar reporting of each company. So we're advocating for templates at FRC, but we because it's principle based, it's not rule based. So we are encouraging companies to apply it based on their own phenomena and circumstances. Thank you.
Thank you very much. I like the clarity there. So when we use the word template, it's not as though once you pick it, you just plug in your numbers or your statements and you say, oh, I've done it. It has to be applied. And in applying it, you're basically applying the principles. But there is a guide. So the templates at the best is just a guide to say these and that are the things that you should be reporting on. This is how to go about it. There is a question by one of our participants that I would like Ms. Ogunkoya to respond to, and then I'll come back to all our panelists to just give us their last, the final comments on these very important conversations that we've had this morning, before we then take the closing remark and vote of thanks by Dr. Josh Bramford. So, Ms. Ogunkoya, this person is talking about sustainability drive that is supposed to be the business of everyone as part of the public sector. How do you think the government, beyond the rhetorics, can key into the drive? The other part says, as an individual within the public space who is a sustainability enthusiast, how can one push this, bearing in mind the structure and culture of the public sector?
Okay, thank you for the questions. Regarding the role of government or public sector in driving this sustainability standards implementation, it's basically about, advocacy, providing those incentives, and also the guidance. Capacity building is also very key, because if we are looking to start mandatory adoption from 2027 and onwards, there is need for capacity building. The skill gap is definitely existing, because it's obviously a new standard where those of us in the sustainability space and even the financial reporting space need to upskill in order to appropriately disclose according to the standards and the principles. So these are basically ways I feel government can, go into directly impacting positively on getting these standards in place for all organizations involved. Then, considering the structure in the public sector and the culture as well, what I would have to say in this way is start at your point. Start from where you are. Start small. Start this advocacy. Provide the lending hand. Provide the skills as much as possible that you have, and also leadership within the public space is also very important to drive the implementation of these standards across board. So what I would like to refer to is the working hand in hand with the likes of the Nigerian Exchange Group. You can see that they have really been very active in pushing and driving the sustainability disclosure alongside the FRCN, which has also been very key and at the forefront of pushing these standards. So we would like to encourage the public to subscribe to the incentives that are provided by our public sector, and also to see how we can improve ourselves, build capacity within our space to properly, implement these standards by the time they become mandatory. Thank you.
Thank you so much. Can you just add your final comments in the whole subject that we've discussed this morning.
Thank you. So in closing, I would first of all like to say thank you to Andersen in Nigeria for hosting this very insightful and informative session. It's a really great opportunity for various stakeholders to get an insight into what the ISSB standards are all about. And we look forward to more of this coming within the coming years in order to entrench and strengthen our feet within the sustainability disclosure space. Thank you once again. And thanks to my colleagues as well. Thank you.
Thank you very much. I'm coming over to you, Coyote. Final comments on sustainability reporting standards and the impact on business models for the year 2024.
Thank you. Thank you very much, Tim Zogwe. Again, thank you everyone, our esteemed audience for joining, and also it's also an honor to be on the platform with my colleagues. So we have this insight now, right? And one message we've tried to pass across is that the reporting are unique and peculiar to business models across different sectors and industries in the economy. From my end, as the lead of accounting advisory in Andersen, I would like to notify us that we also have a high-level IFRS annual update training coming up this Friday. We must have seen our flyers, and it's for you to see the details and also the fee for it to delve deeper. And I'm sure that all outstanding questions that we have here would be addressed. Andersen is a consulting firm that is strategically poised for assisting clients with sustainability reporting. We have the expertise. Temitope Kolade here, our facilitator, champions the ESG bits, while I champion the reporting part of things, right? So we just want you to know that as a firm and a consulting firm, we are here for you, and we look forward to having you on Friday physically and also virtually for the training session. Thank you very much. Thank you, Temitope.
Thanks a lot, Coyote. I'll come over to Mr. Iti.
Okay, I have to also extend the thanks. So, it's been a good session from our own side. I want to thank the panelists also, and also the audience. There's been a lot of good questions. There's been a lot of questions that gets me to go back and say, okay, what can we do better? And how can we really make this a success? Because you see, looking at the time frame, looking at the implementation, I'm looking forward to see a very successful implementation of the IFRS S1 and S2. And we're also looking at a total change in how we do things, because change is the only thing that is inevitable. We want to see new ways of reporting. We want to see new ways of governance in terms of improvement when it comes to sustainability. We want to see regulatory inputs. We want to see even a new way of taxation in the organization, in the economy, to say, how can we even benefit from becoming more sustainable? We want that level of transparency, and we want to be able to grow in a very green way. Thank you, everybody.
Thank you so much. Dr. Abubakar, come over to you.
Thank you very much. And it has been a mutually beneficial interaction. And I'm happy to be here. Like I said, I thank the Andersen Nigeria for this wonderful webinar. It has been very, very good one. And we look forward to more of it in the future, which is going to be mutually beneficial. At Financial Reporting Council of Nigeria, we want to do right. We want to do it right the first time and always. So if you have any information regarding the roadmap, because I saw it on the our roadmaps on the website, frcnigeria.gov.ng, the documents which we have put there sort of for you to look at it, so that to guide you regarding the adoption method, how you're able to come in. But if you have any further information, please do not hesitate to contact me. My name is Dr. Abubakar Razak. I'm the head of Sustainability Reporting Unit in the Financial Reporting Council of Nigeria. Thank you very much, Andersen Nigeria. Thank you, my colleagues, and thank you, audience. Thank you.
Thank you very much for your time at this session. I want to say a very huge thanks to all our participants that have started with us and stayed through the course of this. It's been a rewarding session, I would say, for me, and I believe for everyone who attended. I'll hand over to Dr. Josh Brown, for our head of transfer pricing at Andersen in Nigeria, to do the closing remarks and vote of thanks.
Thank you very much, Temitope. So first and foremost, I want to thank each of the panelists deeply for your time, because we know that you guys are extremely busy, and for you to find time out of your busy schedule to share your thoughts, your knowledge, expertise on such a highly relevant topic of sustainability. We really are indebted to you as a firm. So on behalf of Andersen in Nigeria, we really thank each one of you for your contribution to this discourse. For most of us who are new to this topic, this has been a very good learning experience. I, for one, have no clue what ESG is all about. But if I look at some of the basic questions that you guys have addressed, the question of what is sustainability has clearly been addressed. You know, we've seen its importance. So you've addressed the question of why is it important to businesses for them to take sustainability issues more seriously. We've seen that there are benefits from an investor interest perspective, there are benefits from a tax incentive perspective, and what have you. Apart from the why behind, you know, this topic, we've also seen how businesses can actually go about complying or adopting or transitioning to these standards. And, you know, I heard terminologies like S1 and S2, you know, that was very interesting. But I think, you know, that is part of you guys imparting knowledge in terms of how businesses can actually go about complying. You also talked about the when. You know, it was interesting to know that Nigeria, when compared to other African nations, actually one of the first adopters of these standards. In terms of compliance, we've seen that there are phases. We've talked about the early adopters, those who are adopting it before 2024, you know, the voluntary adopters from 2024 through to 2026, and the mandatory adoption that would, you know, kick in from 2027 and beyond. That is very insightful. Who are those who are going to be impacted? Our companies, you know, so I think this is so broad-based, and there's so much we've learned from today's session. So once again, Dr. Abubakar Razak, thank you very much, you know, to look at things from the regulatory perspective and share your thoughts. To Madam Opeyemi Ogunkoya, thank you very much to look at things from an industry perspective. My very good friend, Oga Ovietie, for your perspective from the industry side. And our in-house experts, Kayode Olayede, for, you know, all the presentations and your thoughts and your technical expertise. Last but not the least is our moderator and technical person, Temitope Kolade, for an excellent, you know, presentation. Finally, I want to thank all participants for patronizing our webinar series. It's part of our professional and social responsibilities to share our thoughts and views on relevant topical issues that impact businesses and the public at large. We hope that when we have future webinar, you know, series like this, you guys will continue to patronize, you know, our sessions. Thank you very much to everyone, and have a blessed day.
Thank you, Dr. Josh. No one does it better. We've understood the why, the when, the what's, and what have you. Right. Thank you, everyone, for joining, and have a blessed day.
Thank you very much.
Yeah.
Bye-bye.
Thank you very much. Bye.
Thank you. Bye. Yeah.
Thank you. Bye.
Thank you very much. Bye-bye.